next up, I'd like to bring back to our stage Benzinga writer Maureen Meehan. Maureen, go ahead and come on out. Everyone, please give it up for Maureen and the panel. I'll let you introduce the panel, Maureen, and take it away.
Thank you so much for that lovely introduction and for all the people who are still here. I have the honor today of being the panel moderator for, I think, a really interesting and very relevant panel made up of three gents who are two from Canada and one from the United States. I'm going to start with Trent Mcdonald. Trent is the Chief Financial Officer at HEXO, Canada, one of the biggest companies and most well-known. Welcome. You can sit right here. Yeah, there you go. All right, next we have Neil Maratta, President and CEO, also Canadian, from Indiva, another cannabis company. Nice to have you on the stage with us. And then we have Kevin McLaughlin, Director of Century Business Consulting. So, there you go. All right. So, oh yes, the panel. We are going to discuss turning focused growth strategies into market share. And as I've said, I think these three gents have a lot of information, background, and views on that topic. So we'll get right into it. I'm going to start with a question farther down there with Kevin. All right. So, well, first of all, no. Let me have each one of you just give everybody a minute or two on your company. I'm sure everybody's certainly heard of HEXO, but Indiva is a bit smaller. Century, you've been the host for our cocktail parties, so we all love you. Give us a couple minutes on your company.
Okay. Well, look, I hope that everyone has heard of us. That would be a great day. But judging from earlier, maybe that's not the case. HEXO is in Canada. We're a licensed producer, fully integrated, and we have the highest level of market share in the recreational space in Canada. And we've been very active in the M&A side, buying licensed producers such as Readycan, Cannabis, and 48 North, and also have been growing dramatically organically on top of that. So we're going to be looking to continue that growth stateside as well, in certain things that we're looking at doing.
Good. I was wondering when you're going to mention that. You're going to be crossing the border soon. All right. So how about you, Neil?
Yeah, Indiva is also a licensed producer in Canada. We're a top 10 LP. We're the leader in the edibles category, which accounts for about 90% of our revenue, and that's really been our focus. We got here entirely through organic growth and through licensing agreements, which have really driven our top line with award-winning U.S. brands like Wana Topical being acquired yesterday by Canopy, as well as Bang Chocolate, which is the leading chocolate. So we lead in gummies, we lead in chocolate, and now we actually also lead in baked goods.
Ooh, sounds good. Okay, next.
So Century is a accounting consulting firm. We provide financial reporting, technical accounting, valuation, risk advisory services. So anything from back office support, helping a company go through an IPO, an offering, registration statement, any type of acquisition-based work. We can act as a resource and have the expertise to do that. Or if you have a valuation need, whether it's a 409A or purchase price allocation, we provide those array of services for companies within the cannabis industry.
Great, thank you. All right, so since we are discussing focused growth strategies, turning focused growth strategies into market share, let's start with you, Kevin. How do you see companies enhancing their product and their products portfolios to grow market share?
Yep. So, first understanding as part of, where you are as an entity and as a, stage of growth is key. There's certainly certain challenges to think about, whether it's, you're getting into, edibles or things like that when you're not necessarily in there. There's challenges in, packaging, advertising, how much, TPC could go into beverages or something like that can be bought, in certain places. If you're talking in the U.S., certainly in states where it's fully legal, it differs from municipality to municipality. So being able to plan accordingly and understanding the geographic impact. acting as a lean entity, not kind of overextending on inventory. We've seen that in the past, I think, just as the industry has developed here. Certainly key. With that being said, if you're expanding into some of these other areas, there's rising demand if we're talking about edibles, beverages, candies, things like that. That area is going to be 25% of the market in the next 5 years or so. It's a large piece of the market. So understanding the data and where that kind of fits, and building out the infrastructure, building partnerships with retailers, brands, the infrastructure to be able to move from maybe something you weren't as focused into, and within the industry, more of an expanding market is important. And obviously obvious, but quality. I think a lot of people think, if you were talking about like chocolate or something like that, and you just add THC to it, it's easy, but it's not necessarily the case. So having that quality and using the data that the market puts out there in terms of being able to really grow in a competitive market.
Right, good quality chocolate and good quality THC. You mentioned a couple of things that made me think of I'm wondering if our Canadian friends, how they feel about how it works there. We know in a way, but with our patchwork of legalization in the United States, and as you mentioned, even from municipality to municipality, we have legalization coming up in some states, and then some municipalities, townships, cities decide not to opt in. So it's a bit of a mess. Now, tell us about Canada. We know a little bit. We know a lot, actually, from observing it. But are you having some similar problems in terms of moving things around the country?
Look, and I'll let Neil chime in here as well. But I think the regulatory environment has stabilized itself, and I think we're all getting used to working within the regulations as they stand today. There's still some things that we're trying to do from a government lobbying perspective on within certain categories like beverage, where you're only allowed to have 5 individual beverages, which makes no sense if you think about it from the perspective of THC and milligrams, and compared to say a 1 ounce bag of high potency THC strained flower. So we're looking at things like that, so we can get into case quantities and then other products. But by and large, it's not hard to move our products around the country. Mm-hmm. Each the retail environments and how the boards work within each province is a bit different. You have certain provinces that are like others and others that are not. Mm-hmm. But we've all figured it out. It's really stabilized. U.S. is much more complex. Mm-hmm. There's no doubt about that. Without federal legalization, still today you have 70% of U.S. citizens who have access to legal cannabis today. And so that's a pretty big industry, and that's a lot of people who can access legal cannabis. Yeah. And as an LP, we're sitting on the outside looking at this and trying to develop strategies as to how we crack that market, because if we wait for federal legalization before we start to do something accretive for our shareholders, it's going to be very tough to get in whenever that day comes, if it comes. Let's be honest. It could be in 8 months, it could be in 8 years. Yes. We're not fortune tellers, but what we know is that a lot of folks in the U.S. have access to legal cannabis today, and as an LP, we have to figure that out. Right,
and they want more access.
And they want more.
They want a lot more. They want it to be easier. So, Neil, we talked about the fact that U.S. optionality and strategy are very important. So this is basically what we're discussing, isn't it?
Mm-hmm.
And
we have not made any forays into the United States as of yet. We've been very focused on Canada. There's some regulatory issues in Canada that we'd like to see changed, similar to what Trent described. Not so much, we don't make beverages, but we do focus on edibles. We have close to 50% market share in edibles in Canada, and we've got this not very intuitive 10 milligram limit on the amount of THC that can be put in a package of edibles. We do face kind of the same sort of gram equivalency, where you're limited to how many edibles you can buy before you have to leave the store, put them in your trunk, come in and buy some more, which is very silly. And having very low limits on THC from a regulatory perspective Also, I think encourages people to go back to the illicit market where they're not faced with these kind of limits, and maybe there's a better value proposition. So we're hopeful that that will change, and we'll do our best to make that change. In terms of the U.S. strategy itself, we're just starting to take a look at it. It wasn't really clear what skill set we had that we could bring to the U.S., but we're very good operators. We're actually the third largest LP by units shipped on a monthly basis. So as an LP over the last 5 years, we've gone through a very steep learning curve. Not so much on the CPG side. We have that expertise in-house, but as it relates to cannabis in particular. So we'll see where that goes.
Right. Well, based on what you're telling me, how do you turn focused growth strategies into better markets, bigger market shares? I mean, how is that? It just seems like you have many of the same problems that we do. Not exactly the same, but how does that work from the Canadian side?
Yeah, no, look, I mean, I think with any company, in any industry, regardless of whether or not it's immature or mature, you have to have a strategy around, the consumer first. Mm-hmm. You have to be consumer centric and understand retail, because that's ultimately where your products are going to be sold. And so you have to understand what brings products to life in retail, what a consumer is going to want in retail. You have to understand what your brands are and what they represent. Is it a high value proposition? Is it just a value proposition in general on price with a mediocre quality? And you have to decide what each brand means and really proliferate that brand and bring it to life in the retail environment. In general, Hexo itself, we've decided that we want to be a very big player in most mainstream categories. Mm-hmm. And so we are first or second in all of those, whether it's flower, concentrates, certainly beverage, where we have 52% market share, hash, and some of the other categories. And we're trying to do something special in vape as well now. So look, we want to be in those categories, and we think we have some very unique products that others just simply don't have today, and we have some expertise. So you really want to build that out in the retail environment. And then within retail, you have to have volume and you have to have margin. Mm-hmm. Otherwise, a retailer is not going to want to sell your product. Okay. And so, you really have to drive that home with how you bring it to life inside the retail environment itself. So we're really focused on that. Yeah. Very, very, very focused on that.
In terms of the drinks, do you see yourself any kind of joint ventures with any American companies? Because it's really big now in both places.
Well, yeah, funny you should say that. Our point partner, it is a joint venture. It's called Trust Beverages, and our partner is Molson Coors.
Oh, right.
And so, and we are right now in Colorado. So we started off in Canada, mm-hmm. took big market share. It's really growing for us there. We've been very successful. And we did it in Colorado, CBD from hemp, not THC derived from cannabis. And we went into mass channel, got a lot of distribution. The uptake was very, very good. We had a lot of success, way beyond, I think, what we thought we would have, quite frankly, in the time frame we had it. Mm-hmm. We always knew we'd be successful, and we've now propelled that. You may have seen last week, I think it was last week, we announced publicly that we are now expanding that portfolio into 14 additional states. Ooh, yeah. And so it is definitely a big play for us and for Molson, quite frankly. Mm-hmm, mm-hmm.
Definitely, yeah. What about you? Any American, are you eyeing any companies that you'd like to join up with?
That's maybe a loaded question, but look, our strategy has primarily been to license award-winning U.S. brands and bring them to Canada. So I would agree 100% with Trent's comments about starting with the consumer. And for us, the real risk, and maybe this is just my capital markets background, but the risk was, how do we know if we make a gummy or a chocolate, for instance, if it's going to be any good? And so we saw a lot of really poor product, nobody's sitting up here today, but a lot of poor product come to market in Canada because I think there was a lot of hubris around, well, anybody can make a cannabis chocolate. You just put THC in chocolate and it'll be fine. That's not true. That's not true with any product and wouldn't be any more true in cannabis. So for us, it's much more about finding great brands. I mean, we really, certainly Hexo can prove us wrong, and I hope you do, but for the most part, consumer brands tend to go north in this continent, not south. And so our view was, let's find great partners where not only would we have something award-winning that we knew was good, because consumer preferences aren't that different from, Los Angeles or New York to Toronto and Vancouver. But let's also gain the know-how from these partners. How do you make the best cannabis chocolate? How do you make the best cannabis gummies? And so that's much more our strategy than acquisition oriented.
Yeah, good. Kevin, where do you see the Canadian cannabis companies fitting into our rapidly growing and expanding markets here?
Yeah, I mean, I think if you look back a few years ago, Canadian companies kind of had the advantage as it was fully legal in Canada. They could kind of build out the infrastructure, footprints of building their brands and their entity. And now as U.S. legalization has slowed, it's now some of these Canadian companies are a little bit at risk to be more outsiders, right? And the U.S. market, is at some point going to overtake the Canadian market. But it's a big enough market where it's part of your strategic direction, your core values, like both the gentlemen said up here, have different strategies. It's not necessarily everybody's flocking to the U.S. has to be part of what your strategy is and whatnot. But you're seeing entities that want to enter, that are eager to enter the market, and with that are setting up different arrangements. I mean, like as Neil mentioned, joint ventures. Tilray just announced a deal with MedMen where they have the option to convert bonds where they would be able to have like 20% ownership. Kronos has a deal that's kind of pending U.S. legalization. Canopy has a couple agreements in place. You're seeing more of the Canadian companies start to put the footprints in place so that when legalization does occur, that they're there as Trent alluded to. It's rapidly growing. There's a lot of opportunity, but need to start moving now as that U.S. legalization is inevitable.
If you don't mind, I'll expand on what Kevin's saying there. Look, he did mention some of our peer group in Canada with Canopy, Tilray, Kronos, and others. There's many different ways to develop a strategy and try to implement that strategy in the U.S. And the U.S., to everyone's point here, is an extremely important market to crack. And so, you look at us, it's a two-pillared strategy. You have CBD from hemp. You have potential partners in that category where you'd want to partner with mainstream great CPGs to bring wonderful products to life that already have brand recognition, distribution, manufacturing capabilities, and a lot of IP around what they do. And you're providing the input to bring that to life from a CBD perspective. And so we're always looking at those partnerships like the Molson Coors. But outside of that, you look at what has been done so far, and a lot of it's that optionality that people buy into. And when you buy into that optionality, it's actually quite accretive for your shareholders, especially if you're buying optionality into a company that is actually listed in the OTC. There's a market cap, there's capital that can be derived, it has access to capital, and people can see what that market cap is, and it gets reflected in your own. So that's what optionality does for you if you're buying into a good company or there's prospects there. We want to be a product company. We don't want to be a fully integrated MSO. Think Procter & Gamble, not Publix or Kroger.
Right.
And so, so we think we have a lot of expertise on that side. And so we're looking to come in here, again, with some type of optionality, and we're putting some resources behind this as we speak to figure out exactly how we're going to do this, in what markets and with what products, but that's what we're doing. And so we're really trying hard to figure out that path as a products company where, you have to have distribution, you have to have source of supply, you have to have a license under which you can produce these products, and then you have to think about brand. You really have to think about brand and that offering if you're bringing in something special. Like, and off the top of my head, you think about our ready format cigarette type pre-roll, which is very unique, and it's a great product. How do you get that into the United States? And on what brand, what cultivars, all of that goes with it. So there's a lot to be said for coming in as a products company, but I understand why other people would want to come in as a quasi MSO.
What do you think about that?
Well, I think one of the quirks of this industry is that you certainly can't import or export cannabis to and from the United States. And so we often get asked the question, okay, well, you partnered with Bang, how does it work? Do we import the chocolates? And I said, no, it's cannabis. So we have to be a licensed producer in Canada. You cannot sell cannabis in Canada legally unless you're a licensed producer. So if a U.S. brand wants to come to Canada, there's a variety of paths, but it's either partner or you're going to have to set up your own LP or purchase an LP, I suppose. So for us, what we're importing though would be, let's say, the key ingredients. So we'll bring the chocolate in from the same chocolatier that makes chocolate for Bang. We bring the pectin in. We actually purchase it directly from Wana. And really, this to us is the essence of global branding. A Coca-Cola should taste the same in New York or Toronto, and it does. And I think that's, we can talk about 1.0, 2.0, 3.0, but our view anyway is that eventually the best brands will be global brands. And whether they start in Canada or the US, we can debate that, but they're going to start in markets where it's legal, right? Whether that's on a state level or a federal level. The tricky part about Canada in terms of moving product around, I think really relates around, and hopefully this will change, but something as silly as putting excise stamps on packages. We produce about 1 million units a month, and we ship to 10 provinces, 2 territories, and we also ship to Shoppers Drug Mart and sell through the medical channel unexcised. So if you think about a milk chocolate, that's one SKU, but whether it's stamped or unstamped, you've got 13 different SKUs. That gets tricky to manage, and that takes a certain skill set.
What do the stamps have to do with it?
It's just a government tax stamp.
Oh, gotcha.
It's different in every province.
Yep.
It's different in every province. Oh,
Yeah. So we've got a vault full of different colored stamps, one for each province.
Oh my gosh.
And it gives our teams fits because part of your demand planning obviously is building inventory, and then it's how many for each province with different stamps. It's very tough to produce and sell 1 million units a month and do that at the last step. So that's kind of another part of our strategy, which is in terms of if we're talking about growing market share, which I think partnering with award-winning brands has helped us do for sure. But the next step is this is a complicated industry as far as the last mile goes. And so there's almost 800 licensed producers in Canada now. There's no limit as to how many there will be. And everybody thinks this is a great business and easy to get into and easy to succeed at. It's a very difficult business. And most small producers, and we just partnered with one that's actually based in Ottawa called Slow Ride Bakery. They make cookies. And so their plan was to, take it all the way home on their own. That's very difficult to do if you're a small producer. And so we think there's all kinds of opportunity for us to leverage what we're good at, which is that last mile, and then encourage all these small producers and give them a path to market.
Gosh, it is complicated no matter where you are, isn't it? Yeah.
It is.
It really is. What do you think, Kevin? Would you like to, what would you say about the Canadian market in general?
I mean, yeah.
If you compare it to ours.
There's certainly, I think it's a little more mature. So, there's that complexity.
Well, it can be more mature. It can get more mature, but I feel like the U.S. market has been around for so long, and maybe we haven't taken advantage of what we learned when it was not legal. It's still not legal, but what we know about retail and production, and
there's a little more certainty. There's certainly restrictions and uncertainty, but if you look at the U.S., just when the market goes fully legal federally, that doesn't. It's going to obviously open up, but if you think about the way that alcohol is sold, if you're in Pennsylvania, you have to go to 2 separate stores to get liquor and beer.
Oh yeah.
Each state is different.
Yeah.
Those state laws are still going to be in place and regulations within the U.S. So there's still going to be challenges from that perspective once it goes federally legal. I think Canada at least is ahead a bit more in that perspective.
That's
you have a little bit more certainty from that perspective.
Yeah, a little bit more conformity statewide. But I'm curious, you mentioned that there's 60% of Americans who have access to cannabis in this country. Yep. What, everybody does in Canada, but what is the market in Canada? Canada is a much smaller population. Who's involved in Canada?
Funny enough, you should ask. I don't think, I think a lot of people get it, but there's still a fundamental lack of understanding for how important a market Canada really is. Canada this year is strumming along to be, depending on who you're talking to, between $4 and $4.5 billion at retail. this year, and it's grown leaps and bounds. It's only when did it become legalized? 2.5, 3 years ago. I mean, that's a big growth path, and it's going to continue like that. Most people say it's going to be between 8 and 10 billion within 4 to 6 years. And so you think about that, as an industry. And you think about sort of the top 5 to 7 players, inevitably through consolidation and some of these smaller players dropping off, they're going to own probably 70% of the market share. And so, in order for you to say to somebody with a straight face, hey, we're going to go down to the US and we think we can do some really special things down there, I think you have to have at least tried to prove it out in Canada as an LP, which doesn't just mean market share, it means market share with great margins. It means great margins turn into, at some point, earnings, because you've been able to control your SG&A. You haven't earned $100 million of EBITDA off the back of $4.5 billion of depreciable capital base, because that's a losing game. And so you have to manage your P&L, and you have to manage your balance sheet, and you have to have had a great strategy that resonated with consumers, that translated into market share, either organically, well, no matter what, organically, and then you buy up maybe some others through M&A that have also been growing organically, and it makes for a stronger company. But inevitably, you have to prove it out, and then take what you've learned and come into the US and try to do something similar in terms of your result, because you've already proved out that you can manage your results. And so we're desperately going to be trying to do that, again, through having some type of optionality to purchase a company that maybe, it could be accretive to our shareholders as a products company. So you get a products company who's an operator, and we have the option to buy that company at some point. And we're looking at that. Nothing to announce just yet, but we're putting resources there. But I think we're in a good position, and I think Canada is an extremely important market.
Oh yeah, absolutely.
I agree. I mean,
go ahead, Neil.
Before, you're right. We're clipping along sort of 4.5 billion now retail. That's after 2 or 3 years. I mean, we sell about 9 billion worth of beer in Canada annually. We like beer. We sell another 9 billion of wine and spirits. So, to get to 8 to 12 or 10 billion or whatever the final number is, that sounds very reasonable to me. And to have gotten there that quickly, I mean, I was a consumer products analyst in not a prior life, but a long time ago. The beer industry kind of grows at GDP or half a GDP growth at best. Eventually, this industry will get there. We can't just project infinite growth. So I agree with Trent. It really is about margins. I think investors are starting to lose patience a little bit with companies that have, for instance, I talked a bit about this morning in my talk, but if your G&A is above your revenue after several years of operations, something's amiss. So you probably need a little bit more capital and financial discipline in all of these markets, but it's also so new, right? So I mean, I do have some empathy. Wasn't that long ago we were in that same boat, not a lot of revenue, but fortunately for us, our products have been well accepted by consumers.
Do you have the same issue with the illicit market? I know that that's taking a lot of market share away from the legal market in places like California, and well, we haven't seen yet in New York, but it'll be a problem. What do you all think of that? Kevin, you can also talk to that, you being an American.
It's another great question, Maureen. It really is another good, look, everything was the illicit market at one point. Until 2.5, 3 years ago, it was all illicit market. Now, the question is, has the total consumption in that market grown if you add the illicit and the legal? And it absolutely has. There are a lot of people, you have to give them credit, they never were consumers in the illegal channel. They just don't want to do something illegal. There's a lot of us out there that just don't like to break the law. But now that it's legal and the stigma has gone away, you're bringing in new consumers. And not just new consumers because it's legal, but because you get companies like Indiva, quite frankly, proliferating the product offering with edibles and things that are more enticing than, lighting up a toke and inhaling that into your lungs. Right. And so some people just are turned off by that, which is why beverage and chocolate and vapes, quite frankly, and other types of product offerings are so important. But I can tell you, look, there's still a vibrant, black market in Canada, but it has shrunk. I can tell you from our estimates, it's now under 50% of the total industry, whereas it was 100. Now, estimates that we've seen, it's between 42 and 46%.
Wow.
Still
Lucky
big
you.
if you think about that in billions, but it's declining, and this gets back to there's not a lot of illegal channel investment going into things like vape. That's a difficult product to really own the market in. And it was always very flower dominant, and with the cost per gram in retail coming down in the legal market, you can typically get a very decent product for $120 per an ounce now in the legal channel. It makes it very difficult for them to compete, especially when it comes to quality and consistency.
I think the Canadian market is so competitive. Again, almost 800 LPs. There's well over 100 LPs that actually deliver products to, let's say, the OCS, the Ontario Provincial Wholesaler. There's over close to 2,000 SKUs. So just because you have a greenhouse, and nothing wrong with greenhouses, and you grow cannabis, doesn't mean you're going to sell that cannabis. And I think we've seen that, maybe this industry has evolved over the last 5 years from, I can tell you, as I co-founded Indiva 6 years ago, the first question I used to get in every meeting was, how many square feet do you have? There couldn't be a less relevant question to us right now. It does not take 300,000 square feet to make gummies or chocolates. It's a secret how many square feet it takes, but it's less. So, I think it brings us full circle also to the conversation about brand, because brand is not just packaging or a logo. Brand will get connected to an experience. And so in the illicit market, you're buying let's just call it a bag of weed, for lack of better lingo. You don't really know what it is. Let's just set aside the whole fact about whether it's tested or whether it's safe or what pesticides are on it, etc. But when you can get a product where you know what's in it, you have a recognizable brand, and if you have a great experience, not only can you go back and get it again, but you can tell somebody about it. And then that same example would apply to the bud tenders, which have an enormous amount of power recommending products in the stores. So I think, sure, the illicit market is still vibrant in Canada for a variety of reasons. It does continue to shrink, but I think it also validates the overall market numbers that we're talking about. If we're at 4 to 5 billion and the illicit market is about half the market, that adds up to this sort of 10 billion estimate. That's not even assuming any new customers or growth. That's just transferring dollar for dollar over. And I agree with Trent, the whole pie has grown. So maybe those estimates are even a little low.
Well, and as you were saying, is the more interesting products roll out and easier to consume, it opens up the market to people who would not want to ever go legal, not even because it was illegal. They just didn't want to smoke.
Right.
So that's really important. So I think that is going to dwindle. And perhaps, what do you think, Kevin? I think in the United States, we can only hope.
Yeah.
But California is really having a problem with that. So
yeah, certainly.
Yeah. Well, we're almost out of time. So does anybody have any parting shots or anything you want to say to the well, this is on YouTube, so you've got a lot more people.
Yeah, well, we
are
are from Canada, so we're probably exorbitantly nice. So no parting shots from that perspective. But look, you think we're all here, and we know that we need to continue to proliferate our brands and to build our product portfolios and to resonate with consumers. But look, this is about growth strategies and continue to build market share, which is what the subject of this panel is. And so we're, Hexo, we're continuing to try to do that. And, I think the United States is going to be a very big step for us. And we're looking, again, at all ways to do that. I think the market's going to continue to grow. It's not going to stop. It's not going to stop anytime soon.
That's right.
And that's for certain. And so there's going to be lots of opportunities for the right players if you have that strategy that is going to be that's going to be hopefully accretive to your shareholders and bring value to your market cap, which is really what it's all about. Yeah. And so look, I'll say one more thing about some of the things that I think we and the whole industry should move towards, because it's a bit on a personal level for us at Hexo, and that's ESG. I know that's not the topic of the panel, but that is a strategy around not just the environment and just doing what's right. It's also about what that means for our brand and our company and how we connect with consumers. Because there's a lot of Gen Z, millennials, and folks that are really hugely into environmental cause, and they should be.
They should be. They want the earth to be here for their kids.
And they should
their
be.
grandkids.
And so I think we've laid down the gauntlet recently, as we've announced, where we are now carbon neutral, not just as a company, but as all of our employees. And we've gotten behind some things. We were the first to go full pouch and get rid of containers. And so, we're putting we're walking the walk, and we're going to continue to do that. So I think all LPs, MSOs, and the whole industry has to get a little more abrasive about environmental strategies, and it's going to turn into more growth, quite frankly.
Yes, and I hope you bring that philosophy here in a very strong way, because we really need it. So, is there anything you want to say, Kevin, before we leave?
No, I think
No?
it's
Okay,
going to be
good.
it's going to be fun to see how this
I
market
know,
continues
right?
to evolve, and it was great to hear what Neil and Trent had. They're leaders in the industry, so it was great to get their insight.
Well, we thank you so much for being here, and we welcome you with open arms when the time comes.
Thank you.
So great. So I guess that's it for now. So thank you again.
Thank you so much.
Thanks, everyone. Thanks for staying late on a Friday, too.
So, what was that?
Thank you, everyone, for staying late on a Friday.